And I think there is a rush on for gold and silver. I think gold and silver have become, and commodities in general, have become more valuable than currency. And I think that's what this is. This is the Zoltan Pozsar, statement that this is Bretton Woods 3, that this is a system where you can see the drive to accumulate commodities is now moving into a higher gear. And so much so that they can't hold silver down at the end of a month. They can't bring it down below 30. So I'm not saying that it couldn't happen tomorrow, but what I am saying, it just seems that the whole system is playing under a new set of rules. I think that the potential for silver to outperform people's expectations is huge. When it happens, I don't know. But when it does happen, the speed in which it moves, I think, will freak people out.
Fundamentally, the rising industrial demand, particularly from the photovoltaic industry, combined with the physical demand from China and India, is exerting immense pressure on the limited supply. Consequently, gold and silver prices are now being dictated by the Chinese market, as Chinese investors in Shanghai still pay a premium of nearly 2% for physical gold. As silver gains strength as a safe haven asset and technical indicators signal bullish momentum, it becomes a strategic asset class for portfolio diversification. With deep experience in the financial services sector, AndySchectman notes that nearly 600 million ounces of silver have been purchased in the past 2.5 years. Schectman believes this indicates a shift towards valuing commodities over currency and is part of a broader economic transition, often referred to as Bretton Woods 3. He further predicts a rapid and dramatic rise in silver prices once its true value emerges, surprising those misled by prolonged price suppression. Regarding recent trends, Schectman suggests that large-scale gold and silver purchases and repatriation of gold from the Bank of England reflect growing distrust in Western financial institutions. Recently, the Reserve Bank of India has transferred 100 tons of gold from its vaults in the UK to its domestic vaults in India. Till the end of March 2024, the RBI's gold price reserve holds around 822.1 tons of gold, which is marked as more than in previous years. Among this, 413.8 tons were held overseas, particularly with the Bank of England and the Bank for International Settlements. This recent transfer is part of a broader initiative to repatriate and secure these assets domestically. Despite being not a new phenomenon, he notes an escalating trend where countries increasingly prefer gold and silver over treasuries. He anticipates this signifies a broader move away from the Western financial system, reflecting a deepening distrust in its stability. While it is very clear that the People's Bank of China is reducing its U.S. Treasury holdings to be less dependent on the U.S. dollar and less susceptible to potential sanctions, the data of foreign U.S. Treasury holdings does not show a broader-based shift out of the dollar. Now, we present you the clips of AndySchectman's insights from his recent interview with Arcadia Economics. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
They've purchased almost 600 million ounces in the past 2.5 years. Let's put it to you that way. They are voraciously accumulating silver, and I don't think that we've seen anything yet. I really don't. And I think that this is why we're seeing the bankers show up at the Shanghai Metals Exchange. This is why we're seeing them bleed down in all of the exchanges. And I think there is a rush on for gold and silver. I think gold and silver have become, and commodities in general, have become more valuable than currency. And I think that's what this is. This is the Zoltan Pozsar, statement that this is Bretton Woods 3, that this is a system where you can see the drive to accumulate commodities is now moving into a higher gear. And so much so that they can't hold silver down at the end of a month. They can't bring it down below 30. So I'm not saying that it couldn't happen tomorrow, but what I am saying, it just seems that the whole system is playing under a new set of rules. I think that the potential for silver to outperform people's expectations is huge. When it happens, I don't know. But when it does happen, the speed in which it moves, I think, will freak people out. Those people that have been lulled to sleep over its lack of movement and its counterintuitive movement, largely because of suppression. It's no different than suppressing interest rates and looking at all the distortions in asset prices. You distort the price of silver, suppress it, you get people just figuring it's a dead asset. And as you can see by India and China and all of the other countries accumulating it and repatriating it, and that it's not. And in fact, when it gets a chance to fully express itself, I think it will be quite something to see. Well, not only have they purchased 1.5 times the amount of gold they did just in the first 4 months of this year than they did all of last year. Remember, I think they bought somewhere in the neighborhood of 400 million ounces of silver last year. And their silver imports in the first 4 months of 2024 have surpassed all of what they did in 2023. And when you see massive gold purchase, massive silver purchase, and then repatriating their gold from the Bank of England, it's a big deal. It's part and parcel of what we just talked about. It's that the West has lost its trust. You talk about the 5 billion in assets that are being held in the US, the Russian assets. There's almost 290 or 95 billion, somewhere 280, 290 billion held in the European Union. And they're trying to do the same thing. The last I heard is they want to take all the interest that is held, that is occurring or accruing from the bonds and assets that they've confiscated or sanctioned or frozen, and take those proceeds, just the interest, which amounts to a few billion a year, and give it to the Ukraine as well. The European Union's lost their mind. And so when India buys all that gold and silver, that's, I think, a natural reaction. It becomes more so when you see them bring all their gold back quietly from the Bank of England. Give us back our gold. We don't trust you any longer. We don't trust that you're going to hold it the way that we want. And if we don't align ideologically, you guys in the West have proven and shown your colors that, just like, I don't remember what was it, Venezuela, that wanted to get their gold back from the Bank of England. They said, no, sorry, can't have it. So I think when you talk about gold and silver being assets that are not simultaneously someone's liability, it's very true unless it's held in the vaults of the Bank of England or the New York Fed. We've seen the same thing happen here in the United States, where Saudi Arabia and several other African and Arab states have repatriated their gold from the New York Fed recently. And before that, we saw the Dutch National Bank, the Bank of Austria, Hungary, Turkey, Poland. They all did the same thing, following the Bundesbank's lead in 2010 and 11. That would have been 2017 and 18. So repatriating of gold and silver is not a new trend, but it's one that is accelerating, as is the accumulation of assets. And this is why, you asked me offline the other day if I had any empirical evidence that countries were using or settling in gold instead of treasuries. And it just seems to me very obvious that these countries are shedding treasuries because of the sanction risk, the geopolitical risk, the confiscation risk, the default risk, and using gold and silver as a substitute. And you can see that by the way they repatriate it, because it is not a liability. If you pay close enough attention, you can see that assets held by the West are truly a liability to these countries who are pushing back against the Western hegemony.
During the interview, AndySchectman warned against devaluing the U.S. currency to address its massive debt, citing the potential erosion of confidence in the dollar. Government debt that has swelled nearly 50% since the early days of the COVID pandemic is generating elevated levels of worry both on Wall Street and in Washington. The federal IOU is now $34.5 trillion, about $11 trillion higher than in March 2020. Schectman's warning highlights the delicate balance between fiscal responsibility, currency stability, and the enduring value of gold as a hedge against financial uncertainty. Moving forward, Schectman opposes closely tying the Federal Reserve to the government and suggests abolishing the Fed altogether due to concerns about currency depreciation and potential risks to monetary policy under different leadership. Let's get back to the interview.
Well, that'd be great for the price of gold and silver. And that's exactly what they'd want to do. I mean, how else do you pay, 35 trillion in debt and 150 trillion in unfunded liabilities? You devalue the currency. You monetize the debt in essence. And that's obvious what they would like to do. But here again, as the world reserve currency, you destroy it. So all of these ideas, I think it's late in the game. We've gone too far down the road as the world reserve currency to do these kinds of actions. No one is going to want to finance our debt when we will choose inflation over austerity, when we will choose the printing press and the devaluation of the dollar in order to pay off the debt. And it just destroys the value of the bond market, destroys the value of the dollar. Why would anyone want to hold it long term when we are choosing to devalue the dollar? But this is not a new concept. That's what Roosevelt did in 33. he confiscated people's gold and then devalued the dollar by 40%. And I think that's a high probability, you know, and in essence, this is what the head banker at the Dutch National Bank said: we should revalue the price of gold. In essence, you devalue the currency against gold. It's not you're revaluing gold, you're devaluing your currency. Yeah, I think that's exactly what they would want to do. He also said he would impose sanctions on countries that want to move away from the dollar and align with the BRICS, as an example. I mean, you can't continue to go around the world making these kinds of decisions, and I think that's what is spurring on the group of the BRICS and the 36 more countries that have formally applied. I think that the way that the U.S. does things is getting long in the tooth, and when you have accumulated as much debt as we have, most of it at the lowest interest rates in human history, to continue to go back to that again, you will destroy all confidence in the Fed. You will destroy all confidence in the dollar and blow up the bond market. Who in their right mind would ever want to trust us again if we do these kinds of things? But it is what he will do, I think. I think it's insanity. We'd be better off getting rid of the Fed altogether than to doing that, because if Trump has his way, he would, push interest rates back to where they were. He'd put the federal funds rate at zero and effectively destroying the dollar. And there's supposed to be separation between the Fed and the government. But look, the bottom line is that since the Fed's inception, the currency has lost 98, 99% of its value. The Fed should be audited and then abolished. But tying it that closely to the government is not a good idea either. And especially when, at least Trump is a businessman and understands the correlation between interest rates and the economy. You get some knucklehead in there like our current president, and who knows where monetary policy would lead. When you're the most powerful bank on the planet, or maybe the second most behind the BIS, yeah, I think it's insanity to do that. I think we'd be better off just abolishing and getting rid of the Fed altogether.
In the short term, silver's bullish momentum remains robust, despite challenges posed by rising Treasury yields and a strengthening U.S. dollar. The market's resilience, particularly in the face of these headwinds, underscores the enduring appeal of silver as a safe haven asset and an inflation hedge. How do you think the increasing reliance on gold and silver as strategic assets will impact global financial dynamics in the coming years? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.